Hello everyone, I'm David Scranton and thank you for clicking this video. You know, since it's the start of a new year, today we're talking about ways that you can improve your financial health. If your goal is to get your finances in shape, then this video is for you. And now it's time to bring in today's guests. We have, of course, Jeff Small, president of Arbor Financial Services, a retirement income store located in Melbourne, Florida. Jeff, hey, great to have you back here. First time I'm actually seeing you in 2022.
Happy New Year, Dave. Glad to be here.
Happy New Year to you, too. And a big Happy New Year to today's special guest, and that's Jim Rogers, chairman of Rogers Holdings and Beeland Trust Incorporated. Jim Rogers, thanks so much for being back with us here on The Income Generation.
I am delighted to be here. I wish I were in Florida. It's the middle of the night here.
There you go.
Well, we'd love to have you in Florida, Jim, but we'll have to settle on our call today. Now, we're talking about 2022, and I want you to consult your deep thought processes on your financial genie and say, hey, what is the market going to be like for 2022? Is the bull market rally going to continue? Because things look pretty good right now. Employment's good. Companies are making money. Inflation is not that good, but that's good for the markets in some ways. So give us your take on 2022, Jim.
Well, you're going to see lots of things go higher for a while. I mean, you have governments all over the world printing staggering amounts of money like has never been done in history. So for a while, things will be great. But eventually, later this year, I would suspect it's all going to pop and explode, and we're going to have a terrible bear market. I mean, I hope it's not the end of the world. We've had bear markets many, many, many times throughout history. I hope we all survive. This one's going to be a very bad one, but I hope we all survive.
Well, I don't think we're expecting to earn 27% like we did in 2020, but I think the year so far does look like it's pretty good. And as long as companies are making money, Jim, the markets will be okay. It's when earnings go south. So you're saying that the money printing will affect earnings?
Well, eventually, the money printing, either things get so high that people just say, I'm going home, I'm not going to play this game anymore, or interest rates start going up and the central banks lose control. And when interest rates go up higher and higher, people realize they got to get out of the market because a bear market is coming. I mean, it's not as though this hasn't happened thousands of times before in history. Yes, the economies are great, most places in the world right now, but we've never had a bull market that goes on forever, except in the minds of some politicians.
Yeah, Jim, it's interesting. I'm concerned because often we have inflation. It's almost exclusively from the demand side of the equation, not the supply side of the equation. But right now, it's really both. And if they overtreat the demand side by raising interest rates and trying to slow things down, that could send us to recession. So do you think the biggest risk right now to our economy in 2022 is the Fed making a misstep?
That is always a great worry. Yeah. Most central banks are not very smart. You know, they're bureaucrats or academics who can't get a real job, so they go to work for the government. They don't have a clue what's going on in the real world, and they nearly always make mistakes, not just ours but everybody's. And eventually, of course, you think this is going to go on forever? If so, David, hallelujah, hallelujah.
No. You're preaching to the choir here, but here's my question. You know, things can always go down longer than we think and go up for longer than we think. So if you had to handicap it, and I know I'm asking you for a crystal ball issue, but, you know, do you think is greater than a 50% chance that we slide into a bear market before the end of 2022? Or do you think maybe greater than a 50% chance we might just be able to push the pain out to 2023? Your best guess.
I would say there's a greater than 50% chance that this is over by the end of 2022. That does not mean it can't go up for a while, and often you have a blow-off when you have markets like this. Right. You know, when things just explode for a while. This could very well explode. If you remember I'll use the U.S. since we're all Americans, you know, at the end of 1999, oh my God, the NASDAQ doubled in a few months or something. I mean, you have the crazy things happen, and that could well happen again. But they always end badly when they end.
Jim, my financial resolution for 2022 really is to come out and hang with you in Singapore. Is that okay?
Well, I think Singapore will probably come out of all this better than many other countries. So by all means, come on over and I'll buy you a beer.
So, I would love to do that, by the way. Listen, we see a lot of folks out there today in the investing community from Main Street America who are really complacent about their money. And their complacency is very similar to the 2007 complacency that we saw in the markets, to the 1998 and 1999 complacency that we saw in the markets. What should those folks from Main Street America have for a financial resolution for 2022? What would you say to them?
Well, I guess I'd say watch income generation to figure out what's going on, because once you understand what's going on, you'll get word. And once you get word, you'll get prepared. I mean, we've seen all this before. I mean, anybody who hasn't seen it can just read about it. At the end of a bull market, things go up all the time. New people come into the market. They tell their friends, oh, I've discovered this new thing, the stock market, and it's fun and it's easy. And you can make money, and it's easy to make money. It always happens. And SPACs, SPACs have been around for a few hundred years, but they always come back at the end of a long bull market, and it always ends badly in the end. I mean, I don't like it at all, but I've seen this rodeo before.
Well, I think from a resolution standpoint, I think the bull market's going to continue. It's when the SPACs run out of money and we see the money train kind of crash along with the lack of stimulus by the Fed that's going to cause a market calamity, Jim. And so, I think we're probably 12 to 18 months away from having that happen.
Well, as I said before, I suspect by the end of 2022, we will start seeing problems in the markets. I mean, who knows? I mean, if they print enough money, there's a theory around now called MMT, more money today. If they do that, it could go on a couple of years. I mean, some of these, if you go back and look at wild bubbles in history, some of them have just gone on unbelievably and absurd things happen. But they have always ended badly. Listen, I haven't sold anything. I'm not short. I'm not selling short. But I'm just telling you, this is not going to last forever. And when it ends, it's going to be the worst bull market in my lifetime, worst bear market in my lifetime. We had a bear market in 2008 because of too much debt. Oh my gosh, since then, debt all over the world has skyrocketed. The next bear market has to be a bad one.
So Jim, I know you haven't sold anything yet, but let's face it, most people listening to you right now don't have Jim Rogers money, okay? So what's your best advice? Your best advice for those income generation members that are either retired or within 10 years of retirement in light of your concerns about the financial markets today?
Well, my very best advice is do not listen to hot tips, especially at this stage of the market. Do not invest in anything unless you yourself know a lot about it. Yes, you can watch income generation, but even then, only invest in what you yourself know a lot about, because when things start going wrong, you don't know what to do unless you know a lot about it yourself. And that's how people get wiped out when bear markets come.
Yeah, it makes sense. Get educated. And, how about real quick, what's your best advice for sticking to New Year's resolutions versus the majority of the population that make New Year's resolutions and let them fall to the wayside year after year?
Well, since we're talking about investments, most assets are bonds are in a bubble. Stocks are beginning to form bubbles. Property in many countries is a bubble. The only assets that aren't up already are commodities. Silver is down 60% from its all-time high. Sugar is down 60%. If I were suggesting for people to invest, I would say, look at the things that haven't gone up a lot yet, and maybe there are opportunities there. And with everybody printing a lot of money, normally real assets do better than paper assets.
Yeah, certainly don't buy the things that are clearly in a bubble right now. Good advice, as always. Jeff Small, Jim Rogers, thanks so much for being here with us on the Income Generation. Thank you for watching today's video, 20 tips to improve your financial health in 2022. If you enjoyed it, click the thumbs up button to give us a like, and also make sure that you subscribe to our YouTube channel for new content each and every week.